Good day everyone. Today we are Group 2 will be presenting company review and strategic plan for Samsung Group. These are my group members, which consist Nur Adila Farhana, Kimberly Clara, and me myself, Daim Putri Aisyah binti Al Musfa. Let us begin with the background of the company. Samsung Group was founded in 1938 in South Korea by Lee Byung-chul. The company initially started as a trading business before gradually expanding into manufacturing in other industries. A major turning point occurred in 1969 with the establishment of Samsung Electronics, which marked Samsung's entry into electronic industry. Over the years, Samsung grew into a global conglomerate with strong operations in electronics, semiconductors, and advanced technology. Today, Samsung is recognized as a world leader in innovation, supported by strong research and development capabilities.
In this chapter, we will review Samsung Electronics as a company, highlighting its key achievements, challenges, and strategic positioning. Samsung is recognized as a global leader in both semiconductor and consumer electronics, consistently ranking among the top 5 global brands. Its achievements include groundbreaking products like the Galaxy X foldable smartphone and QLED TVs, strong financial performance, and a diversified portfolio that ensure resilience across different market conditions. However, Samsung also faced challenges such as innovation fatigue in matured market saturation, and the complexity of managing a large multidimensional workforce. Despite these challenges, the company's strategic positioning, strong internal capabilities, and focus on emerging technologies such as 5G, AI, IoT provide a solid foundation for continued growth and competitiveness. This chapter will explore this aspect in detail through SWOT analysis, strategic framework, and competitiveness evaluation. Samsung SWOT analysis. First, Samsung's strength begin with its strong global brand, which support premium pricing and customer trust worldwide. The company also has semiconductor and memory technology leadership, particularly in advanced chip production. Its diverse product portfolio spanning smartphone, appliance, and semiconductor reduce reliance on a single market. Finally, high R&D investment and integration with manufacturing enable faster innovation and efficient product development. Next, despite these strengths, Samsung faced several weaknesses. Declining smartphone market share reflect intense competition in both premium and mid-range segment. High capital intensity, especially in semiconductor manufacturing, increases financial risk. A complex conglomerate structure can slow down decision-making, while uneven profitability across business segments creates earning volatility. Samsung can leverage key external opportunities. The expansion of 5G, AI, and IoT is driving demand for advanced device and components. Rising semiconductor demand from data centers, EVs, and cloud computing support long-term growth. Growth in smart home and healthcare technologies align with changing customer needs, while emerging markets provide new revenue opportunities. Samsung also faced several external threats. Intense competition put pressure on innovation and pricing. Rapid technological change require continuous investment to stay competitive. Market saturation is developed economies limit growth, while geopolitical risk and trade tension threaten global supply chains. This slide presents the internal factor evaluation or IFE metrics, which assess Samsung Electronics' internal strengths and weaknesses. Samsung key strength includes a strong global brand, leadership in semiconductor and memory technology, and high investment in research and development. These are the major strengths that support long-term competitive advantage. Additional strengths such as diversified product portfolio and strong integration between R&D and manufacturing improve efficiency and stability. However, Samsung faces minor weaknesses including declining smartphone market share, high capital intensity, a complex organizational structure, and uneven segment profitability. Overall, Samsung records an IFE score of 2.92, which is above the industry average, indicating a strong internal position where strength outweighs weaknesses. This slide presents the external factor evaluation or EFE metric, which assess how effectively Samsung Electronics respond to external opportunities and threats. Samsung score highly in major opportunities, particularly the growth of 5G, artificial intelligence, and the Internet of Things, as well as rising global semiconductor demand from data center, electric vehicles, and cloud computing. This high rating reflects Samsung's strong technological capabilities and readiness to capture market growth. Other opportunities such as smart home and healthcare technologies and expansion in emerging markets are rated above the average, indicating a good growth potential. However, threats including intense competition, geopolitical risks, and market saturation in developed economies remain challenged. Overall, Samsung achieved EFE score of 2.72, which is above the industry average, showing that Samsung is well positioned externally but must continue to manage competitive and environmental pressure. This slide shows the competitive profile matrix, which compares Samsung Electronics with Apple and TSMC based on key factors such as brand reputation, product innovation, R&D capability, market share, cost efficiency, global operation, and financial strength. Samsung scores strongly across most factors, particularly in brand reputation, product innovation, R&D capability, cost efficiency, and global operations, reflecting a balanced and diversified competitive advantage. Apple performed well in brand reputation and financial strength, but is weaker in cost efficiency and has a narrower product focus. TSMC excelled in advanced semiconductor manufacturing and market share, but lacked diversification and consumer market presence. Overall, Samsung recorded the highest CPM score at 3.35 compared to TSMC with 3.15 and Apple's with 2.85, confirming Samsung's strongest overall competitive position consistent with the IFE and EFE result.
My name is Nur Adila Fana with student ID 2023@02412, and now we will move to chapter 3. I will explain Samsung's strategic position using the space metric first. Space metric is a tool that evaluates a company's strategy by analyzing internal strength and external condition. The metrics consider four dimensions: financial position, competitive position, industry position, and stability position. Internally, Samsung has a strong financial position rated 6, supported by its global brand, leadership in semiconductors, and heavy investment in research and development. However, its competitive position is rated at -5 due to challenges such as high capital requirements, a complex conglomerate structure, and declining smartphone market share. Externally, Samsung operates with an industry position rating of 5, driven by growth in 5G, AI, load, and semiconductor demand. Environmental threats like intense competition and geopolitical risks result in a stability position rating of -4. When plotted, Samsung falls into the aggressive quadrant, indicating strong growth potential. This supports strategies such as expanding into emerging markets, increasing R&D investment, and accelerating innovation. Overall, the space metric shows Samsung is well positioned for aggressive growth and long-term global leadership. Next, I will explain Samsung's strategic position using the internal-external or IE matrix, which combines internal strengths and weaknesses with external opportunities and threats to guide strategic decisions. Samsung's IFE score of 2.92 indicates a strong internal position supported by its global brands, leadership in semiconductors, high R&D investment, diversified product portfolio. However, challenges including declining smartphone market share and the complexity of managing a large conglomerate. Externally, Samsung's EFE score of 2.72 shows a moderately strong ability to respond to market conditions. Opportunity exists in 5G, AI, load, smart technology, and rising semiconductor demand, while threats include intense competition, rapid technological change, and geopolitical risks. When plotted on the IE matrix, Samsung falls into cell V, which recommends a hold and maintain strategy. This means focusing on strengthening core business while selectively investing in high-growth areas. Overall, the IE metric shows that Samsung is well positioned for stable growth and long-term competitiveness. Now, let's look at Samsung's product portfolio using the BCG matrix, which evaluates products based on market growth and market share to guide resource allocation. Smart TVs are classified as stars as they operate in a high-growth market with strong demand for advanced displays and smart features. These products require high investment but generate strong revenue and future potential. Laptops fall under question marks. Although the market is growing due to remote work and online learning, Samsung's market share is relatively low, so the company must decide whether to invest further or limit the resources. Household appliances such as washing machines and refrigerator are cash cows. They have high market share and provide steady cash flow and with lower investment needs. Printers are classified as stocks with low growth and declining demand, making even divestment or resource reallocation more suitable. Overall, the BCG matrix helps Samsung decide where to invest, maintain, or withdraw to ensure long-term profitability and stability. Next, let's look at Samsung QSPM or Quantitative Strategic Planning Matrix, which help decide the best strategy based on strength, weaknesses, opportunity, and trends. We evaluated three strategies, which are product innovation and R&D expansion, market expansion into emerging markets, and divesting low-performing products and optimizing operation. Each factor like Samsung's strong brand or growth in 5G is given a weight, and each strategy receives an attractiveness score. Multiplying the weight by the score gives the total attractiveness score, and summing this gives the overall score for each strategy. The results are, for the product innovation and R&D expansion is 5.93, for market expansion is 5.04, for the divestment and optimization is also 5.04. This clearly shows that product innovation and R&D expansion is the most attractive strategy, as it best leverages Samsung's strength and opportunities to maintain technological leadership and drive long-term growth. In short, the QSPM helps Samsung make a data-driven, objective decision about where to focus resources for maximum impact.
From chapter 3, we can see that there are top 3 strategies implementation, which are product development, market development, and retrenchment. The first strategy selected is product development. The main objective for this strategy is to strengthen Samsung's innovation capability and maintain its technological leadership in highly competitive markets. Samsung focuses on key areas such as advanced semiconductors, AI, 5G enabled devices, as well as smart home and healthcare technologies. To implement this strategy, Samsung increases long-term R&D investment, integrates R&D with manufacturing, forms strategic partnerships, and continuously upskill its employees. As a result, Samsung is able to achieve faster product innovation, stronger competitive advantage, and long-term business sustainability. The second strategy is market development, which focuses on expanding Samsung's global market presence. The objective of this strategy is to increase market share and sales growth while reducing reliance on saturated developed markets. Samsung targets emerging markets in Asia, Africa, and Latin America, where there is strong growth potential and increasing demand for smart devices. Implementation actions include localized pricing and market strategies, introducing affordable product variants, strengthening distribution and e-commerce channels, and improving after-sales service. This strategy helps Samsung achieve higher revenues, diversification, stronger international brand presence, and improve customer loyalty. The third and last strategy is retrenchment, which focuses on improving efficiency and strategic focus. The objective is to reduce costs, minimize resource wastage, and strengthen the Samsung's focus on core and profitability business areas. Samsung identifies low-performing and non-core business units such as printer manufacturing for divestment or downsizing. Through cost-benefit analysis and performance evaluation, resources are relocated to high-growth segments such as semiconductors and advanced technology. These strategies result in lower operating costs, improved profitability, and stronger long-term financial sustainability.
This final chapter summarizes the overall findings of the analysis and presents strategic recommendation for Samsung Electronics. Following the implementation of the proposed strategies, Samsung Electronics' revised internal factor evaluation score is expected to improve. This improvement reflects stronger internal alignment, enhanced operational effectiveness, and better strategic focus. The revised IFE metric shows that these strategies reinforce Samsung's existing strength while reducing key internal weaknesses. Major strengths such as the Samsung strong global brand, leadership in semiconductor and technology, and high investment in research and development remains rated as major strength. Continued focus on advanced technologies such as artificial intelligence, 5G, next generations, semiconductor, and smart device ensure that Samsung maintains technological leadership and product differentiation. In addition, Samsung's diversified product portfolio improves from a minor to a major strength. This change is driven by the retrenchment strategy, which remove or downsize low-performing businesses you need, resulting in a more strategic and focused portfolio. On the weakness side, the decline in smartphone market share reduced through market development initiative, particularly expansion into emerging market by tailoring product and pricing to local consumer needs. Samsung is able to stabilize sales volume and reduce reliance on saturated developed market. The retrenchment strategy also helped address internal efficiency related to Samsung complex conglomerate structure, streamlining operations, improve coordination, managerial focus, and decision-making speed. Furthermore, uneven segment profitability improved as resources are relocated toward high growth and high margin segments such as semiconductor and AI-enabled product. Overall, this strategy's initiative increased Samsung's total IFE score from 2.92 to 3.17. This indicates a strong internal position where strength clearly outweighed remaining weaknesses and confirm that Samsung is better prepared to support long-term growth and sustain its competitive advantage. Following the implementation of the proposed strategies, Samsung Electronics revised external factor evaluation score is expected to improve significantly. This improvement reflects a stronger ability to capitalize on external opportunities while more effectively managing environmental threats in highly competitive global environment. The revised EFE metric shows that Samsung continued to respond strongly to key growth opportunities such as the expansion of 5G, artificial intelligence, and the Internet of Things, as well as the rising global semiconductor demand. These opportunities remain rated as outstanding responses, supported by focused product development and sustained investment in research and development. Notably, opportunities related to smartphone and healthcare technologies and growth potential in emerging markets improved from above average to outstanding responses. This change is driven primarily by the market development strategy, which enables Samsung to expand its presence in regions such as Asia, Africa, and Latin America through localizing market, stronger distribution network, and improved adaptability to regional market conditions. On the threat side, intense competition from Apple, TSMC, and Chinese manufacturers remains significant. However, the impact of this threat is mitigated through continuous innovation and strategic product differentiation. The threat of rapid technology change is reduced as the product development effort focus on high growth areas such as AI, 5G-enabled device, and advanced semiconductor. The retrenchment strategy further strengthens Samsung's external adaptability by reducing exposure to low growth and highly competitive segments. By reallocating resources towards high potential market and technologies, Samsung improved resilience against market saturation in development economies and geopolitical risks, even though these threats cannot be fully eliminated. Overall, the revised EFE score increased from 2.72 to 3.44. This indicates a significant, stronger external position, demonstrating Samsung's enhanced responsiveness to market opportunities and improved capability to manage external threats, thereby supporting sustainable growth and long-term competitiveness in the global electronic and semiconductor industry.
Next, I will talk about the importance of strategic management in business. Strategic management is important for long-term business success for four main reasons. First, it provides direction by clearly defining a company's vision, mission, and goals so employees and management work toward the same objective. For example, Samsung uses strategic planning to focus on innovation, research and development, and also global expansion. Second, it enhances competitiveness by helping companies analyze market trends, competitors, and customer needs. This allows Samsung to introduce advanced products such as smartphones, smart TV, and semiconductors to stay ahead of rivals like Apple. Third, strategy management optimizes resources by ensuring money, technology, and human capital are invested where they create the most value. Samsung's strong investment in R&D and employee development improve productivity and reduce waste. Lastly, it increases the adaptability, enabling businesses to respond effectively to changes such as technological advancements and shifting customer preference. Samsung's adapt by embracing trends like 5G and AI. Overall, strategic management supports growth, efficiency, and also long-term market leadership.